$50,000. $50,000 is the amount that a retiree would get in fixed income with $10 million in the bank in 2020. Not 500,000, not 100,000, 50,000. Less than the average income in the United States for $10 million. And that's in the safest investment in the world. That's in US Treasuries, the bedrock of the entire global financial system. The thing that pension funds, the thing that insurance funds are required to own. That's how absurd it had become. And this wasn't just the United States. This is a global absurdity. But we can see that it's a global absurdity. In Japan, where over 30% of the population are retirees dependent on fixed income, we're literally paying the government to hold their money, negative yielding bonds. In the United Kingdom, we saw the gilt crisis in 2022. Pensions nearly collapsed. In Europe, in the EU, over $17 trillion was literally worth less than nothing, paying their government to hold their money for them. All right, real quick. He said, my name is Mark Moss. A lot of you guys might know me from YouTube, but I've been working behind the scenes in this for quite a while. I'm now the chief Bitcoin strategist of Satsuma. And today I want to break down 3 different things for you. Number 1, what the great unraveling is, the end of the 40-year bond market. And it's not just a crisis. It's also the greatest opportunity that we've ever seen. Number 2, why over $300 trillion of desperate capital has nowhere to go. And then I want to look at number 3, why companies creating this Bitcoinized yield, they're not competing for market share, but they're building the replacement for the entire global bond market. Now that's pretty ambitious. I thought I had 20 minutes. I found out I just have 12. So bear with me. I'm going to talk really fast and I'm going to go through this information really quickly and see if I can finish on time. All right, so we're talking about the 40-year super cycle of bonds. Again, the bedrock of the entire global financial system and the mathematical absurdity of it all coming to an end. And to really understand where we're going, we sort of have to understand where we came from. You see, in 1980, when Paul Volcker tried to kill inflation, we raised rates to 15%. That was the heyday for fixed income, 15% on your money. But over the last 40 years, the trend has gone bonds up and yields down. For 40 years, it was buying every dip. Every crisis made bonds more valuable. Central banks coordinated globally to make sure that anyone could have made money just buying bonds, just buying the dip. An entire generation built their retirement on that. But by 2020, as I showed you earlier, it reached peak absurdity. We saw just how broken this system had become. Again, in the United States, in the reserve asset of the world, $10 million only gave you $50,000. In Japan, 30% of the people are over 65. They're in that retirement period. They need the yield. They couldn't get any. Again, all around the world, we saw the absurdity. And this wasn't because of a free market, of course. It was grand coordination. Central banks worked together to pump liquidity through the fixed income market. And every central bank, every pension fund, every insurance company was required to buy bonds, was mandated, was regulated to hold them. And for 40 years, the game was rigged to go up in one direction. Now, we saw this come to an end here. COVID was not the problem. It was a pinprick. It's what saw this entire momentum shift. And suddenly the coordination broke. Inflation started coming back. And for the first time in 2 generations, bond investors learned what their grandparents knew before them, is that, yeah, bonds can lose money, a lot of money. So how big is this big unwind? The end of this 40-year trend. And where are we in this new game? Well, let's just say if I was registering for like an ultra marathon, I'm just getting to the registration desk. We're just barely getting started. We're about to see the biggest shift in capital that we've seen in generations. I think it's the biggest opportunity we've seen in 500 years. So we have $300 trillion in global fixed income, or in the debt market. 145 trillion of that is in the fixed income market. And this little orange sliver that we have at the bottom is Bitcoin, with about $12 trillion. It's like an ocean that's about to fill into a swimming pool. And the problem is that this can't be fixed. It certainly can't be fixed with conventional tools because positive yields don't fix this. If you just take a look at this chart, you can see in the United States, $37 trillion at about 5% rates. That's $1.75 trillion just in interest service alone. 36% of all revenue of the government goes to just servicing the debt. And if they tried to normalize that to say 7%, that becomes over 50% of the revenue of the government. Japan, it's even worse. As we know, it's further down the path. We can see rates went from half a point all the way down to negative and have rebounded all the way back to half a point. In a population that's over 30% of them are retired and need fixed income. And if they got that normalized to just 2%, it would be 85% of the revenue going to just service the debt. The UK, it's not quite as severe. Debt's over 3 trillion pounds at a 5% rate. It's about 14, 15% of the revenue to service the debt. But again, if that normalized to say 7%, that's over 25% of the revenue. It's a big problem. So it's an inescapable trap. There's no way out. It's a mathematical certainty. They could raise rates, bankrupt the government. They could keep rates below inflation, liquidate the bondholders. Of course, they can print more money. They face hyperinflation. So which way do they go? Now, this is not a new problem. The governments have known about this for a long time. And the good news for the governments is they have a playbook. The playbook is something the BIS and the IMF have put a paper out called the liquidation of government debt. So when the governments have a lot of debt and they can't afford it, what are they going to do? Well, they do what they did in the 1940s, which is they liquidate it. Financial repression. We saw after World War II, when debt reached an all-time high in the UK, 238% debt to GDP. Through the liquidation of government debt, through financial repression, they brought it from 238% down to 100%. In the United States, they brought it from 112% debt to GDP to 60% by keeping rates below inflation. Bondholders lost 3 to 4% of their wealth annually for decades. That's the playbook. But of course, who needs fixed income anyway? The Bitcoiners would say, just buy Bitcoin, just hodl, right? The problem is in the developed world, we have an aging demographics. 10,000 Americans in the United States turn 65 every single day. They can't hodl. They can't hodl forever. They need income. They got to pay their bills. They got to pay their electricity. They got to eat. They need the income. The same is true in Japan. Again, 30% are already over 65. They need medicine. They got to keep their lights on. For 40 years, they just bought bonds. It was easy. Safe, predictable, boring bonds. The deal was lower returns for guaranteed safety, but that deal's broken. Now, the big problem is this liability mismatch. Pension funds, insurance companies, they have to have a yield. They need 7 to 8% return on the bonds they're holding. But the problem is there's a big gap. $70 trillion is the underfunded gap. And it's growing exponentially because the rates keep going down. So, back to the government's playbook, $300 trillion is being liquidated. Retirees and pensions, they're the ones that are being sacrificed through this. The governments have no other choice. So the question isn't whether the capital will flee. The question is really, where will the capital flee to? That's the question. So the reality, I have to go through this pretty quickly. Obviously, the options are pretty stark. There's really one choice. They can default on the debt. Of course, that's not going to happen. Number two, they can do austerity. They can just cut the budget. They can live on a budget. They could try to live on the income they bring in. That's what Elon Musk said. Well, forget Doge. We can't cut the government budget. We have to try and grow out of this, I guess. Scott Bessent said the same thing. Or that's the growth. And so really, it leaves option 4, which again, financial repression. 150 trillion of that 300 trillion is fixed income. So where does it go? There's 800 million people in the world over 65. 250 million of them are in the developed world. 60 million just in America alone. Staggering numbers. Again, pension funds, insurance companies are desperate for the yield. And what they need is something safer than bonds, but pays better than bonds. But where do you find that? That's the question. Where does the $300 trillion go that's desperate for this income-seeking capital? Where does it go? Well, there's a new bedrock. This isn't just the largest transfer of wealth we've ever seen. It's shifting the entire bedrock of the entire global financial system. While people were looking at the price, the smartest people were realizing the true power of the network. The world's only pristine, unconfiscatable, censorship-resistant, perfectly scarce collateral layer. And on top of that, that's the new bedrock, and this gives us Bitcoinized yield. Now, MicroStrategy has laid out the playbook for everybody, taking Bitcoin, slicing it up, and created a yield manufacturing machine. The product's pretty simple. Just pay more than bonds, create something safer than bonds. 2, 3, 500% basis points more, and 5 times over collateralized. Not just hoarding Bitcoin, productizing it for the world. So we get this financial engineering creating this Bitcoinized yield. Started with convertible bonds, it went to preferreds. Who knows what's gonna be next? We saw the latest release of Stretch, STRC, went to go raise 500 million, got oversubscribed to 2.6 billion. Why? Because the demand is infinite. Remember the 250 million retirees in the developed world, the 60 million in America, the 70 trillion in underfunded liabilities, all looking for a home? That's why the demand is infinite. They don't need Bitcoin, well, they do need Bitcoin, but they need yield. And now they can get Bitcoin yield without having to own Bitcoin directly. Now this playbook is going global, obviously, and that brings us to the United Kingdom. We think the United Kingdom is sort of like Japan 2.0. The reason why we named our company Satsuma is it's a Japanese orange. Orange, obviously, and for Japan. We believe the UK's path is similar to Japan's. Japan sort of tells us the future. We see the same debasement, the same pressure on the gilt market, on the bond market. And in Satsuma, we've got a London Stock Exchange main market listing. We raised $217 million of equity. Learning from the pioneers of the past, Taylor said that he wouldn't take convertible debt again, so we didn't take any debt. And we raised money from some of the largest institutions in the UK. And that's not just confidence, that's strategic relationships and credibility to get this flywheel going faster. And what's interesting about the UK is the UK's non-government fixed income is about 130% the size of the government debt. It's pretty unique. It's a lot different than when you look at the United States and Japan. It's larger than the entire stock market. Again, searching for yield. And here's what's beautiful about this. What we think is that every new Bitcoin treasury company launches and helps the other one stronger, makes the other one stronger. We think that more companies equal more products equal more liquidity, and more liquidity equals more institutional acceptance. So we believe that we're not competing for a piece of a pie. We're literally building a new market with unlimited demand. And once this has started, the flywheel starts going exponential. We see more capital fleeing bonds, $300 trillion, buys Bitcoin-backed products, more Bitcoin-backed products, gets better Bitcoin price, gets more product can be built, which then attracts more capital. And that flywheel continues to go faster and faster and faster. And I'm gonna finish up with this slide because I know I'm short on time, but about every 40 to 50 years, the world's monetary system is reset. 1944, we saw global cooperation with the Bretton Woods Agreement. 1971, we saw the switch to the petrodollar system, which is what we've been living on for the last 50 years. And now, this time, we're seeing a Bitcoin standard. And again, this isn't about a wealth transfer where money is just leaving one generation and going to the next, but literally the entire base and bedrock of the global financial system is being replaced with Bitcoin. That's how big the opportunity is. That's what we're all doing. That's what we're all a part of. And I gotta go. I'm out of time. Thanks so much.